Well, the system is pretty straightforward. It is a business finance pre-qualification and business credit building system. It is designed to help any small business owner become bankable and also dispel a lot of the myths about business credit and business finance that are currently in the market. The system is really easy to use. It contains a success scan where any business owner can run a free success scan that will scan 150 data points on their business, and it's going to let them know in a very visual environment where their business stands on becoming bankable and what items they need to complete in order to become bankable. So when they log in, the system is going to show them where they're currently at for completing their items of lender compliance, where they are at for optimizing their business credit and personal credit reporting the way lenders want to see it, where they are at for building their business credit, where their company is currently at for qualifying for any one of the 20 different funding programs that are in the system. Business lenders are also now looking at your web rating score and your NAP validation, so it'll show your business where you're at for that. And also, it'll give you a good idea of where your business is currently valued based on standard valuation methods. The system's very visual in that it's going to show you red X's and green checks of items that you need to address. Again, there is a lot of myths in the marketplace about building business credit and what business credit can do for your business. And we want to put, that in its proper place, in that becoming bankable has really 4 legs to the table. The first leg of that is lender compliance. The second leg is your bank rating. The third leg is establishing comparable credit. And the fourth leg is building strong business credit scores with all 4 national business credit reporting agencies. Leaving out any one of those and your table's not going to be strong, you're not going to be bankable. To give you an idea, we scanned 10,000 operational LLCs and we found only 62 of them to be currently bankable, which is why so many businesses get declined when they go out to lenders, is because people are leaving things out. Lender compliance, as you see over here, is a series of items that lenders will check on your business really as a gatekeeper before they even bother to check your credit. If they're going to check your credit, your personal and your business credit, it's going to cost them money to do that. And rather than paying money to check your credit, lender compliance are a series of items that they can check for free in an API environment that takes seconds, that tells them that your business is a high risk of default. And the reason that's of concern is the fact that lenders sell their loan portfolios in the secondary market to investors, and they want to be able to show those investors that the loans that they have made are as safe as possible and the lowest risk of default. They use lender compliance to do that, and they're looking backwards at data that shows them those businesses typically who've already defaulted, and typically are defaulted at a rate 10 to 20 times higher than other businesses. And those are things like your entity filing. So you need to be an entity. You can't just be a sole proprietor or partnership. Otherwise, any loan a lender would make to you would be considered a personal loan, and therefore the lender would subject themselves to all of the laws and regulations around personal loan lending, which they don't want to do. Therefore, you need to be an entity, either an LLC or a corporation. You need to make sure that that entity is in good standing, which means you filed your LLC a couple years ago, but the last couple of years you didn't file the required paperwork. And so your entity is listed as no longer in good standing. You're declined. So you could be declined because you're a sole proprietor or partnership. You could be declined because your entity is not in good standing. You could be declined because your business name creates a trademark infringement. You didn't bother to check to see if the name was available nationally. When you check your business name with any Secretary of State, they're just going to tell you whether that name is available in that state, not necessarily nationally. So there might be a company that has a trademark or a service mark already on that name or something very similar. Like if you were to set up American Express Tire Shop, you are going to get a cease and desist letter, and therefore your business is going to go under, and therefore the lender knows you're going to fail. And remember, all of this is being done in a API environment. It's being done by computers. It's not being done by a person. It's being done in seconds. So we've already covered 3 things that will get your business declined, and we're still on page 1. A 4th thing is a foreign corporation filing. You filed your LLC in Nevada or Wyoming or Delaware because those are popular, but you're doing business in the state of Georgia, and the state of Georgia requires a foreign corporation filing status. The lender's computer checks to see if you have filed that with the state of Georgia. You have not, and therefore you are declined. There's 4 items that got your business declined, and you didn't even know those 4 items existed. In every section, there is a virtual coach telling you what to do, how to do it, and why you're doing it. And in every section, there are service vendors that will help you complete whatever it is that's there to complete. So that's one item of lender compliance. Other items very quickly, your location. You must be doing business from a business location. If the lender checks your address and it's a residential address or a mail stop, more than likely you're declined. If you're operating your business solely from a cell phone, more than likely you're declined. And again, it's not that that's a bad way of doing business. It's just the history of people who came before you showed that people who operated their business from a residential address or a mail stop or solely from a cell phone defaulted at a rate 10 to 20 times higher than those that did business in more of a professional manner. Therefore, you have lumped yourself in with businesses who've already defaulted at a high rate, and therefore you are a high risk of default. It's simply what's going to be on the test. That's all this is, lenders have an underwriting algorithm test. It's not personal. It's what has been built into the computer test. And you need, as a business owner, need to know what's on the test. And if you've got a red X, the lender's computer has simply said that you are 10 to 20 times more likely to default. Think about it this way. If you were renting somebody your house and you found out that they fell into a category that was 10 to 20 times more likely to default, so you were much more likely to have to evict them, would you rent to them or would you rent to somebody else? That's just all it is. It's simple things like having a professional email. If you're joesplumbing@gmail.com, you're likely to get declined because people who operate from a free Gmail account have already defaulted at a rate 10 to 20 times higher than those that took the time to become joe@joesplumbing.com. You don't have a website. It's 2023. You need to have a website. That website needs to be professionally done. It needs to have a good standing. And I'll show you that in a minute. You need to have all of your licenses in place. Like, for example, if you put on an application that your business is located inside the city limits of, say, Atlanta, and you don't have a business license, well, a lender's computer can check to see if you're required to have a business license in that locale, and you don't, and therefore you're declined because you're in violation of doing business inside the city limits of Atlanta. Now, you may say, well, I'm a virtual business or I'm a this or a that. Remember, it's being done by a computer that doesn't care. It's not going to take the time to ask you the question. It's just going to send you a decline letter. And the thing about business lending is there is no requirement to tell you why you're declined. So we've already covered about 10 items that will get you declined, and all you will receive is a "we regret to inform you" letter. It won't tell you why, and if you go apply with another lender, you'll get declined. You go apply with another lender, you'll get declined because you simply didn't know what was on the test. Business lenders need to realize that 90% of all business loan applications are declined. I mean, so you already have a very small window for success. And if you don't know what the test is on the test, then you really have again, we tested just randomly 10,000 LLCs, and we tested the ones who were operational. They weren't just sitting on the shelf. They had a business location, not a mail stop or a residence. They had been operating for more than a year, and they had 10 or less employees, very typical small business owners, and only 62 of them out of 10,000 passed this test. I mean, that's horrific, right? I mean, and come on, let's help people out. It's things like just dotting the I's and crossing the T's. Just check. Does your state, the county, the city, the IRS, your bank, the 411 directory assistance, does everybody have you the same way? Just do they have you operating the same way at the same location? Everybody's got LLC at the end. Everybody's got, if it's your business name has the number 4 in it, this guy has you spelled out as, as FOUR. This one's got you as FORE, and this one's got you as the number 4. And now, nobody knows who they're doing business with. And maybe you have 3 or 4, open business credit files because people have spelled it wrong and people put you at the wrong address. So just clean things up, dot the I's, cross the T's. Things like, is your business classified properly? When you first file your EIN and you first get your phone number, you first get set up with your LLC, you are going to be automatically, not you personally, but you're going to be automatically classified by your SIC or your NAICS classification. And that needs to match what you put on your loan applications. So you put down you're in the construction industry, but somebody misclassified you as a mortgage broker, and the mortgage industry is a redlined industry. And so you're declined everywhere. You had everything else done, all green checks, you got good revenue, you've got good everything, and you're declined because you're classified in a redlined industry. Just that simple. Things like checking the UCC database. UCC is a database that's going to show things that don't necessarily show up on your credit reports. Many times you'll have a company judgment against you because of the fact something was filed against your company, but they didn't have your EIN number, they didn't have this, or they didn't have that. And so it doesn't show up on your business credit reports, but it shows up in the UCC database. Or you have a mechanics lien. You fought over the price you paid for an air conditioner repair. Somebody filed a lawsuit pending against your business because they slipped and fell on your front steps. Well, a lender doesn't know if that's a $1,500 lawsuit or a $15 million lawsuit, and it shows up in the UCC database with a quick one-click check. I mean, simple, easy, check it. If it's there, by the way, if you did any government type of loan, an SBA loan, a payroll protection loan, a COVID recovery loan, those come with what's called a blanket lien. And what that means is nobody can use any of your other assets or revenue or receivables or invoices to secure any other loans. Any equipment that you own can't be sold and leased back because of the fact there is a blanket lien or, an encumbrance on all past, present, and future assets. Just check it. That's all it is. Just check it. That's true of paid off judgments. That's true of paid off tax liens. That's true of mechanics liens. You think about it, somebody came out and they repaired your commercial air conditioner, and the bid was for 1,000, but the work ended up being 2,000. You fought over the other 1,000. You didn't pay it. They filed a mechanics lien. You settled and you paid it off. Maybe you split the difference, whatever it was. But the person who filed that mechanics lien will probably never file the paperwork to release it. And therefore, a year down the road, you go to get a loan. And again, the lender declines you and will never tell you why. And it's because of that mechanics lien from a year ago that's already been taken care of that nobody bothered to release. And simply because you as a business owner didn't know the UCC database existed. I mean, it's this all we're doing, guys, here is just pulling back the veil and saying, here's what's on the test. Say it over and over again. Things like your bank rating. Any business lender can check your bank rating in seconds, and most business owners don't know the bank rating exists or how to calculate it. Bank rating is simply your average daily bank balance for the last 90 days. That's it. Nothing more. They can't see, your amounts in, amounts out. The bank just gives you a rating. It can be done in seconds for free. All I need to know is your business name and where you bank. I don't need your account number. I don't need anything like that. So let's say you have a low 3. Low means it starts with a 1, 2, or a 3. And 3 means it has 3 digits. So if you have a low 3 bank rating, you just told the lender that for the last 90 days in your business general ledger checking account, you've only had $100 to $300. Now, when you ask me as a lender for a loan that's a $1,500, $2,000, $2,500 a month payment, of course you're declined. So you need at least a low 5. Now, there is something a little bit more invasive when you actually fill out the loan application to, to the extent the lender wants it, and they ask you to give you the routing number and account number. Now they can do a bank verification. And a bank verification goes deeper than a bank rating. Now I can see as a lender, I can see 36 months worth of your account. I can see your average daily balance. I can see your deposits. I can see your total expenses. I can see your month ending balances. I can see the current balance in the account. I can see, of course, the bank ratings, but also the bank ratings of any other account associated with that business. So if you have payroll or savings, or maybe you have 2 or 3 different accounts for other things, I can see those. I can see the dates of all return checks and NSFs. And a big one is I can see anyone who is an authorized signer on any account. So I can see their name, their social security number, their driver's license, their home address, etc. So let's say you've got someone on your business account that it maybe isn't an owner, but you've authorized them to sign, and they've got horrible credit, or they've got something in a criminal record background, and you've listed them as a signer on your account. And I, as a lender, check that, and I see, John, I don't like your background. Have a nice day. Again, I just declined you. Everything about your business is wonderful, but I just declined you because I didn't like what I saw on the person that you gave an authorization to on the business account that I'm going to put my money into. So it has nothing to do with you. It maybe had nothing to do with the owners of the company. Maybe that person doesn't own anything on the company. So be careful about who you give and know the background of who is a signer on your account, because as soon as you give lender an authorization to look at that account number and routing number and account number, the invasiveness really goes pretty deep. And I guarantee you, there's not a small business owner in the country that you're going to deal with that realizes that will happen. So that's, again, all we're doing is we're just saying what we have done in the system is we have researched the underwriting algorithm computers of over 7,000 sources of financing, over 4,000 commercial lenders, and over 3,000 business-to-business lenders. And whatever they've got on their test, we built into the system so that you as a small business owner wouldn't be surprised. We're going to do things like tell you about comparable credit, which is a third leg of the table. So some guy on the internet tells you that he can build business credit that can replace your personal credit, and he is going to get you a whole bunch of $300 and $500 trade lines to buy packing material and toilet paper and office supplies. Well, imagine in your personal credit, if you had 5 trade lines and that's all you had, and they were for $300 to $500, and now you went and asked somebody for a $35,000 or a $50,000 loan. Would you get it? I mean, the answer is no, you wouldn't, because you don't have comparable credit. So there is something that we tell all small business owners to do, that they will all make the same mistake. Every single business owner we've ever dealt with has made this mistake. They're going to take money to start their business. They're going to pull it off of credit cards, go borrow it from friends and family, sell an asset, take it out of savings, et cetera, et cetera, et cetera. And they're going to put it right in their general ledger checking account, and they're going to spend it. And in 90 or 120 days, it's gone. They bought the desks and chairs and computers and forklifts and, conveyor belts and pizza ovens, and poof, the money's gone. What they could have done with that, let's say it's $25,000. They could have taken that $25,000, and we provide a host of banks and credit unions that will open up a certificate of deposit on that $25,000 and give you a secured business line of credit that you can use one for one. It's not reported to the business credit reporting agencies as secured. And now you've got a $25,000 line of credit with Bank of America And the thing about it is Bank of America doesn't tell you they do this program. And we give you a host of banks and credit unions that will do this program, none of which will tell you it's not on their websites that they will do it. Now, when you go to apply for that Home Depot card, or you go to apply for that office, that office supply, net 30 account, instead of getting approved for that $300, you get approved for 3,000 or 5,000 or 10,000. So now when we help you develop, let's say, 8, 9, 10, 11, 12 lines of credit, and they're all 3, 5, 10, 15,000, and you've got this $25,000 also Bank of America line of credit. Now, when you go to apply for that forklift lease, or you want to, $15,000 from Dell Financial, or you want to get a $35,000 used utility truck from Ford, you get approved because you've got comparable credit. Again, 4 legs to the table: lender compliance, fully green checked; bank rating, at least a low 5; comparable credit lines that mean something, not just a whole bunch of $300 and $500, credit lines. We'll also tell you something about optimizing your credit reporting. There are 4 business credit reporting agencies. There's a whole bunch of YouTube people out there telling you that they can build a Paydex score of 80 or higher and somehow magically get you $50,000 or $100,000 in cash, when they simply can't, because there's not a cash lender in the entire country. Say it again: there is not a cash lender in the entire country that uses Paydex or Dun & Bradstreet or cares. Banks, credit unions, credit cards, they don't use it. Well, credit cards and credit unions primarily will check Experian business. A lot of banks will check Equifax business. A lot of landlords, internet providers, alarm system providers, phone system providers, if you want those corp only, will check credit safe. And is Dun & Bradstreet and Paydex score important? Of course it is, but primarily for business to business lines of credit, where there are thousands of companies who are extending credit for, landscaping material, high vac, material, auto parts, even to the point of having that air conditioner repaired, or your commercial parking lot repaved, that will give you net 30, 60, or 90-day terms. Now they are checking Dun & Bradstreet. And so Dun & Bradstreet is very important for that, but not for cash. So, if you find yourself on YouTube believing that somebody can magically build business credits that's going to replace your personal credit and nobody's ever going to check it, well, guess what? That's not going to happen. We have the underwriting criteria of over 7,000 sources of financing, and we've yet to find that. So we have no idea where these leprechauns and unicorns are coming from. They tend to prey on the people that don't have any money, that don't have any resources, that are desperate for this, and so they're going to charge them a couple $1,000s of money they don't have, and on a promise that just simply isn't true. Our system is not going to do that. You may not like the answers, but the answers are what they are. You need at least 5 to 7 to 8 reporting trade lines with all 4 business credit reporting agencies, not just with Dun & Bradstreet. You need strong business credit scores in the 70 to 80 range with all 4 business credit reporting agencies, not just with Dun & Bradstreet. And again, remember, business credit is one leg of the table. If you don't have lender compliance completed, if you haven't developed at least a low 5 bank rating, if you haven't developed comparable credit, then having business credit unto itself, without revenue, without assets, without comparable credit, is candidly, it's almost worthless. It's not the decision making. When you get down to business credit, lenders are making a decision on how long they finance you, how much they finance you, how much interest rate they charge you. And so that's where it becomes valuable, not in the initial decisioning stage, which is lender compliance. Because consider this, guys: if I'm a business lender and I'm pulling credit on you personally, the owners of the business, and on your business, I have to pay the credit reporting agencies for those reports, $10, $12, $15 to get 3 personal credit reports with FICO 8 scores, 3 or 4 business credit reports with scores. And if I'm doing 1 million loan applications a year, that's $10 to $15 million I got to spend on just credit reports. But if you don't have comparable credit, if your bank rating's a low 3, if you didn't complete lender compliance, I can check all those things for free in seconds. So why would I spend money on you if I already know I'm not going to do business with you? I won't go that far. Just so if I'm going to check owner's credit, well, if I'm going to check owner's credit, I'll tell you this. I'm not really going to look at so much at your FICO score. Your FICO score is important if you're financing a couch or a car or a house. It's not that important if you're financing a business, because in business, I'm really concerned with your revolving accounts. How did you pay your revolving accounts? Because that's typically how you're going to pay me as a business lender. I don't care about your mortgage. I don't care about your car payment. I definitely don't care about your Netflix bill for your Experian Boost. So none of that has any meaning at all for a business lender. I will care about your revolving accounts, and your revolving accounts are, I want to see no more than 45% balance to limit, which business owners don't know. We all have that favorite credit card that gives us the most points, the most dollars back, etc. And that one's always at 80%. We didn't realize that 80% balance to limit just got you declined. So do some balance transfers, no more than 45% balance to limit, no more than 3 inquiries in the last 90 days. Why? Because in business lending, you can do what's called stacking. Business loans and credit do not report until you use them. Unlike personal credit, if you get a personal credit account for a couch, a car, a credit card, it's going to be on your personal credit reports somewhere between 7 and 10 days. Business loans will not report until you use them. So if you get a loan approved today and you don't touch it for, say, 3 months, it won't appear for 3 months. That allows you the ability to stack those loans. So if I see 4 inquiries on you in the last 90 days, I think, well, you asked me for 50,000. You probably asked those other 4 lenders for 50,000, and you're stacking loans. So I'm actually part of a $250,000 loan, and you don't qualify for a $250,000. I was about to approve you for 50,000, which you do qualify for, but you don't qualify for a $250,000. So I'm going to wait 6 months and see what happens with those other lenders. So you got declined simply because you had 4 inquiries, and you as a business owner didn't know that. You also didn't know that I was going to check your debt acceleration, which I saw that 3 months ago you had 10,000 in revolving debt. But now, 3 months later, because you ran up all your cards and all this and that, and you got new cards, and now you got 60,000 in revolving debt, and that's called debt acceleration. Your debt acceleration on a graph looks like a hockey stick going up. So you're declined, because you didn't know I was going to check your debt acceleration. You didn't know that I was going to check with these 5 data reporting gathering companies that collect everything on you that's unregulated. LexisNexis, SageStream, ARS, Innovus, and CoreLogic. Do you know they're going to check, they're going to have data on how far you went in school, how many schools you went to, did you graduate from this school, did you graduate from college? Where have you lived? Where have you received mail? Who are your relatives? What kind of cars did you buy? Were they new? Were they used? What color were they? What make and model were they? What type of appliances did you purchase? How many people have you listed as a different name? How many people have your first name last, or your middle name first, or, also known as? We've seen people with 80 plus pages of content. Do you know that if you share any medical history about yourself on a website, let's say that website collects data for your doctor, but it's not actually your doctor. Well, there's no restriction from them selling that data and collecting that data. So you thought your diagnosis for your colon cancer or your diabetes or your high blood pressure or your depression was, was private. And it's in here because you shared it on some medical site where they collect data for people, not necessarily your doctor's office. So the file at your doctor's office is confidential, but not if they turned it over to a public website to collect information on you. And that's scary stuff. So if you're going to go out for a business loan, freeze these. Actually, if you just freeze these, there's no reason to give people access to this. And if you pull your personal credit report, on top of it, you'll see an information section where it'll have your name and your address, and it'll have a whole bunch of other addresses on you, and it'll have a whole bunch of other names on you. Because if anybody has sent you a piece of mail with a different name or a different address, or maybe they've got your mom's address on there, or your sister's, or a roommate from college on there, where you've got 5 different names and 12 different addresses in the last 10 years. Well, a business lender might decline you because they're not sure who they're doing business with. But if you freeze all of these, and then you simply send a letter to the personal credit reporting agencies along with a copy of your driver's license that says, this is me, this is only me, and I'm concerned about identity theft. Please remove everything else. This is my name, my social security number, my date of birth. This is my only name, my only address. This is my only last employer. Then you will find typically within 3 weeks, all of that other information will just automatically be removed, because this is where they get it from and they can't get it anymore. So now your credit report looks real clean. Your personal credit report looks real clean because it's got one name, one address, one date of birth, one, previous employer, current employer, nice and clean. But most people don't know that. So that's all we're doing here, is just telling you what's going on in the background. Imagine having 84 pages of data on you that you didn't even know was being collected. I mean, oh my gosh. It'll also have all of your past relationships. Like if you've been married 3 times and divorced, it'll have that. It'll have your divorce settlements. It'll have your kids' names on there. I mean, yeah, Big Brother is watching you, and he's called Big Tech, not Big Brother. It's pretty amazing what they collect on you. So I've already told you how invasive the banks. And so that's that. And in this system, we're going to show you the vendors that you can sign up for, who they report to, what their terms are. When you select them, we're going to show you which ones you've selected, like in the vendors, and where you go to sign up and where you go to pay them. In the business credit cards, we're going to show you that there are basically 5 underwriters in the entire country, and that's it. And so you didn't know that. You didn't know that Home Depot is not Home Depot card, it's a city card, as is Best Buy, Staples, Office Depot, and 100 others. Comenity has almost 100 of their own. Synchrony has over 100 of their own. So you just want to know who's who. And if you're applying for a Home Depot card, don't apply for a Home Depot, Best Buy, and Staples all on the same day. You will get declined. But if you apply for a Home Depot and get approved, you can go back the next day and they'll give you a Best Buy and a Staples and an Office Depot and a Goodyear and a Tractor Supply, because Citibank already loves you. But if you get declined at Home Depot, guess what's going to happen at Best Buy and Staples? So Citibank does not love you, and you're going to get declined. Same thing with Comenity, same thing with Synchrony. Almost everything, tires, oil, gas, fleet, is WEX. So don't apply for a Flying J and a Chevron and a Sinclair all on the same day. Apply for one, see if you get approved. If you do, go back because WEX loves you. If you get declined, don't go back because you need to fix it. Elon underwrites for over 1,300 banks and credit unions. That means 1,300 banks and credit unions are using Elon's underwriting algorithm. Therefore, if you got a good chance at a credit union, if you go to a credit union and that credit union has a credit card, more than likely it's Elon. And we'll also tell you a secret about credit unions, as credit unions have a $35,000 risk limit for any new member less than 90 days. So if you just joined the credit union yesterday and you apply for a $75,000 loan, you are declined. But if you apply for a $35,000 loan, more than likely, if you qualify, you're approved. And credit cards would be a part of that $35,000. If the credit union does vehicle financing is not part of that $35,000. So it's just, we're just pulling back the veil and telling you what's what. And now also there's a good thing about credit unions. is pretty much every credit union in the country uses the same underwriting algorithm. And therefore, there's a ton of credit unions that will approve you based on a soft pull, where you can go and do a soft pull on a credit union. Now, credit unions are typically a personal loan, but it's an installment loan. And what did we say earlier that business lenders are concerned about? They're concerned about revolving loans, not installment loans. So let's say you've got a lot of, 70 and 80% balance to limits in your credit cards and you need to bring it down. A great place to go is to a credit union, get an installment loan, 24, 36, 72 months, fixed payment, and down to about a 640. I mean, $10,000, $20,000 is pretty easy to get from a credit union. And also, unfortunately, credit unions are relatively easy to stack. So you maybe could do 2 or 3 credit unions, get yourself $30,000 or $40,000. What are you going to do with that? You're not going to run right out and pay your credit cards down. The first thing you're going to do is you're going to go do the certificate of deposit loan to get yourself a business line of credit for that $40,000, then pull some money out of that, then pay some credit cards down. So you're going to do it in the right order, because now you've established comparable credit using the credit union money that you pre-qualified under a signature loan. But if you went to one credit union and said, been a member 10 minutes and said, I need 50 grand, you didn't know you got declined simply because you applied for too much. And typically they won't come back to you and say, well, hey, we can only approve you for 35,000 in the first 90 days. And I'll tell you why, because most people who work at the credit union or the bank don't know the underwriting criteria. The computer knows the underwriting criteria, but the employees aren't told. They're just told, put the application in the computer and see what happens. Accessing funding. We're going to show you the funding programs you pre-qualify for with a green plus, if this account had any, and we would show you which ones you had applied for. And again, if you don't apply for or qualify for something, we're going to tell you what that program takes. And so we did take the guesswork out. Don't apply for a program that has a red minus with any lender, because if you don't qualify in our system, it doesn't mean go to a different lender, because the lenders are already in here. So therefore, you don't qualify for a term loan. You don't qualify for an equipment sale leaseback. But if you've done what it takes in the system to pre-qualify for that, you'll see a nice green plus, and you can pre-qualify for that. Your online analysis. Your online analysis, I don't know if this account has one, but your online analysis is simply what's called a web rating score. It's based on Google data, and what a business lender is going to do is they're going to check your domain name, and they're going to check your domain name for your SEO, your social media standings, your star ratings, your reputation management. They're going to check your backlinks, your mobile friendliness, and the errors on your site. And it's going to give you a score from 0 to 100 that's very like a credit score. And if you score less than a 60, odds are you're going to be declined because you're a high risk of default. Because think about it this way. Would your wife appreciated it if you had the brakes on the car, on the family car, repaired at a shop that had a 2-star rating? You know one thing for sure, she certainly wouldn't get her hair done someplace with a 2-star rating. So why would I, as a business lender, lend to you if you have a 2-star rating? If you have horrible, consumer reviews for your reputation management, if you have a Better Business Bureau rating of an F, I'm not going to lend to you, because you're more than likely in this information age, you're going to be out of business. Therefore, have a nice day. You didn't pay attention to it. Your NAP validation. NAP stands for name, address, phone, as it exists on the top 20 business listing directories: Google, Facebook, Merchant Circle, Better Business Bureau, Chamber of Commerce, Yellow Pages, Foursquare. Well, I checked and you're not there. Your business name, address, and phone number aren't there. Why not, John? Are you hiding? Why don't you want people to find you? Therefore, you're declined because of NAP validation. We got all the way down to NAP validation and you're declined. And so, just fix it. And again, in the system, how do you fix it? You go to one of these service providers and they'll fix it for you for a few bucks. And poof, you have great NAV validation. Poof, you've got a good web rating score. Poof, you've got your accounting in order. You've got, I mean, we never give you a problem, but what your virtual coach over here doesn't tell you about, what it is, how to deal with it, why you're dealing with it, with a solution provider that'll help you fix it in a timely manner for a few bucks. And now you've got a great NAV validation. Now you have a great web analysis score. Down to, what's your business worth? Why is this important? Well, let's say a lender on an application asks you, what's your business worth? And you thought, well, last year I had $300,000 in gross revenue, did pretty good. And I've heard on the internet that my business is worth 5 times my gross revenue. So therefore my business is worth 1.5 million. And that's what I put down on the application. You didn't realize that just got you declined. Why? Because they asked you 2 other questions on that application. As a business owner, how much were you able to take home out of the business in the last 12 months? And you said 75,000. How many hours on average do you work per week in the business? And you said 60. Well, your business is worth, depending on its industry, 2 to 5 times your SDE, which is called your seller's discretionary earnings. It's also known as owner's discretionary earnings. And that is how much money were you able to take out of the business in the last 12 months if you didn't have to work a single hour in that business? Because now as a business lender, I know that if I have to foreclose on your business and take your business back as security for this loan, I have to replace you with someone who's willing to work 60 hours a week, 52 weeks a year for $75,000. They can make more money than that working at Walmart with less headaches. So your business is actually worth nothing, 0, but on the application you put down 1.5 million. We're too far apart, you're declined. But if you would have put down 0, now I'm considering all the other factor, because at least you have a realistic idea of what your business is worth. So now I'm considering your other assets, your revenue, your contracts, your receivables, your purchase orders, so even your business opportunity. So that's what that's all about. So the system is called the success system because it's designed to help your business be successful, become bankable, increase your web rating score, your NAV validation, so people can find you. Be concerned with your seller's discretionary earnings as your business goes forward. So if you want to sell it, at some point in the future, it's worth something to sell. I mean, we're looking at it from all aspects, and even to the point where if you've completed lender compliance and turned everything to green checks, and you've built business credit, and you've got comparable credit, and you've got a good bank rating, we now give you access to over 3,000 vendor lines of credit for every product and service imaginable on credit-based terms. But you don't get in here, you can see, until you've turned all these things to green checks, and until you've done the other things in the system. And it's going to be very visual about how you're doing it. Yeah, guys, we had fun. We hope you get a lot of business owners that use the technology and help themselves become bankable and successful and build something of value that they can eventually, sell and make a lot of money off of. All right, guys. Well, have a nice day. I'm going to drop off of here.